Hey, Steve Jolly, the Home Buying Skills Channel. Today's show, we're going to talk about the recent Fed actions, how that affected interest rates, and what we expect from home prices, rents, the rental market, secondary homes, and the good news in all of this. Let's talk about the Fed and interest rates. And as you may know, the United States is facing some significant financial challenges which could force the Fed to pivot sooner than expected. Fed Chair Powell recently hinted at higher interest rates with a terminal rate potentially reaching 5.2 to 5.7%. But then chaos ensued with SVB and Signature Bank and rumors of First Republic Bank creating turmoil within the banking system. So what is the Fed's plan? Will they continue to raise interest rates, pause, or start reducing them sooner than planned? So let's discuss the Fed's action, how it's likely to affect you and the market if you want to buy or sell in 2023. So some positive news in the economy is that the U.S. inflation cooled in February despite having to confront these ongoing bank failures. And consumer inflation numbers have fallen for 9 consecutive months, with the headline inflation at 6%, its lowest level since 2021. And although still above the Fed's 2% target, it's considerably lower than June's peak of 9.1%. Looking ahead, we have some big months coming up where inflation could improve significantly. Part of this cooling off is due to a drop in energy costs, which could help keep inflation in check. However, housing costs have increased by 8.1% in the past year, accounting for nearly 60% of the inflation number, after excluding energy and food prices. Now let's talk a little bit about housing costs and rent increases. And there's a silver lining here. Rent increases have dropped to their lowest level in nearly a year, with the median asking rent rising 1.7% year over year. This is the smallest increase in nearly 2 years and the lowest level in a year. And as these lower housing costs play into the inflation numbers, we can expect inflation to come down faster. It's essential to note that while rents are decreasing, they're still increasing year over year, just not at the same rate as before. Rent inflation is currently up 8.7% year over year, and housing inflation is up 8.1% year over year. But as these numbers are replaced with lower figures in the coming months, inflation will continue to moderate. Now let's talk about interest rates. The flight to safety amid bank failures pushed mortgage rates down, benefiting home buyers. However, this comes at a cost due to turmoil within the banking system. As interest rates improved, mortgage demand jumped and buyer demand picked up too. People who were sitting on the fence are now getting back into the market. We saw this happen in January when interest rates moved down, and then when they moved up, some home buyer activity paused. Many potential buyers are waiting for the right opportunity to enter the market, whether it's due to being priced out or low confidence in the U.S. housing market. So what's next for the Fed? The Federal Reserve raised interest rates 0.25% at its March meeting due to inflation. That just makes it more difficult for banks to survive and for them to raise rates again. Some experts argue that the Fed may still increase interest rates to mitigate inflation risk and restore confidence in the financial system. It's essential to consider how this could affect the housing market. If the Fed decides to raise interest rates, it may put upward pressure on mortgage rates, leading to decreased demand and affordability and potentially lower prices. Let's talk about a little bit about housing inventory and its effect on home prices. And one of the main drivers of the housing market in recent years has been low inventory. The number of available homes for sale remains low, but there are signs of a potential increase. New construction has seen a steady rise, and existing homeowners may decide to sell as they see the potential for higher interest rates and inflation moderating. However, don't expect home prices to drop dramatically. Home values have been rising for years, and even if inventory increases, it will take time for the market to balance out, a long time. And in the meantime, higher interest rates could offset any price reduction for buyers. Let's talk about some regional market trends. It's essential to keep in mind that the real estate market varies by region, by city, even street by street. And some areas have seen significant price growth while others have remained relatively stable. As a buyer or seller, it's crucial to understand your local market and work with a real estate professional who can help you navigate the complexities. For example, markets like Phoenix, Las Vegas, Nashville, and Austin have seen rapid price appreciation, where Midwestern cities like Cleveland, Dallas, and Milwaukee have experienced a more moderate level of growth. Affordability remains a significant concern in high-priced coastal cities like San Francisco, Los Angeles, New York City. Let's talk a little bit about investment properties and vacation homes. The real estate market has also seen a boom in investment properties and vacation homes. Lower interest rates have encouraged buyers to diversify their portfolios and invest in additional properties. However, higher interest rates could put a damper on this trend as financing becomes more and more expensive. Additionally, many vacation destinations experienced a surge in demand during the pandemic as remote work allowed people to live and work wherever they wanted to. And as the pandemic wanes and companies bring employees back to the office, the demand for vacation homes could soften, potentially leading to a slowdown in these markets. Now let's talk about my final thoughts. The real estate market in 2023 is shaping up to be a fascinating one. With the Fed's next move uncertain due to recent bank failures, interest rates remain a wild card. Inflation is cooling and rent increases are slowing, which could help moderate the housing market. Buyer demand remains strong, but higher interest rates could lead to a shift in the market, making it essential for both buyers and sellers to stay informed and work with a knowledgeable real estate professional. So if you're thinking of buying or selling a home in 2023, it's crucial to stay informed, understand your local market, and work with a trusted real estate agent to navigate these uncertain times. Thank you for watching this video on the housing market. If you liked it, click the like button to let us know you enjoyed it. If you have any questions, leave them in the comment section below, and I'll be sure to answer each and every one of them. And be sure to subscribe and hit the like button so you never miss another episode. Take care and have a great day.